What is going on, everybody? Lottery Stocks here. Welcome back to the channel. Welcome to the channel. If you're new, today's video is brought to you by Moo. Make sure to hit the link pinned in the top of comments to sign up and fund your account to get up to 10 free stocks, each worth up to $2,000. So there's literally no reason not to do it. It's a lot better than Webull, a lot better than Robinhood, and a lot better than other trading platforms in general. So make sure to do that. Without further ado, hit that like, hit that subscribe button if you find anything of value out of this video, and drop a comment down below. Let's get into it. Okay, so this article came out today and it says, even as the stock has fallen well below its highs, some of the apes are still vowing in social media posts to hold on to their stock, betting it will spark a so-called short squeeze that could send shares to 1,000. Now, I don't know who they think we are or who they think the apes are, but $1,000 a share is not the price that we're going for. And we know that the share price right now is psychological, because when nobody sells and they're fishing for shares that they have to cover, they can bid the price up as high as they want. But until somebody lets go of those shares, the price is going to go as high as we would like it to. But real quick, I wanted to bring this up. This was August of 2021, and it showed the current funds who were short AMC, and you can see Simplex Trading, Susquehanna, Citadel, 683 Capital Management, Anchorage Capital, Group 1 Trading, Wolverine Trading, Bank of America, Millennium Management, and Picton Mahoney Asset Management. If you take a look in here, Citadel wasn't actually the largest short amongst AMC. It was actually 8.4 million. I can't tell you from a perspective of now, but I think this is why Ken Griffin acts so comfortable. But what he doesn't understand is that when he has to close out these positions, when other hedge funds are winding up the price higher and higher, this doesn't mean that a small position can be closed. These positions get closed at whatever price we want them to be closed at, so just keep that in the back of your head. With that being said, you saw Anchorage Capital and Bank of America in here. Anchorage Capital Group LLC has announced it's shutting down due to significant losses. The hedge fund is closing after 18 years and returning the $7.4 billion it manages back to clients. Their credit fund, Anchorage Capital Partners, is suspending clients' ability to get their money back. Hedge fund Citadel Securities is facing a similar issue with their clients, preventing them from withdrawing unless they pay a heavy fee. Anchorage Capital was one of the top 10 financial institutions shorting AMC stock and now they are throwing in the towel. Again, this is an old article, but keep in mind Citadel is still short AMC that we know of. And from the same article, hedge funds have been over-leveraging their positions due to betting against retail investors who aren't giving up the fight for a fair market and a short squeeze play in their favorite meme stocks. Now, 34 of the largest banks are being required to hold $1 trillion in capital, enough to be able to loan mortgages and businesses loans during an economic downturn such as a recession. Will banks margin call hedge funds to meet new capital requirements of October 1st, or will they default? Now, we talked about the collateral requirements, and Phase 6 has been implemented. However, master agreements and swaps have an expiration date. So whatever collateral was borrowed before doesn't have to necessarily be paid back to the banks right away, unless the banks end up defaulting, which we saw England's get close to, which we will talk about in a minute. With that being said, Bank of America's CEO Moynihan has said consumer credit quality in the US is the highest it has ever seen, yet consumer prices increased 0.4% in September. CPI advanced 8.2% on year basis. Core CPI rises 0.6%, jumps 6.6% year on year. Now, people are assuming the Federal Reserve will deliver a fourth 75 basis point rate hike next month. However, the Fed funds market is now pricing in a 13% chance of a 100 basis point rate hike. UK pension funds selling stokes fear across bond markets. Pension funds are now selling US high-grade corporates. Announced end of central bank support has investors nervous. And Bank of England's Bailey has a message for funds. You've got 3 days to wind up positions. Bank of England governor says funds have 3 days to wind up positions, and lobby group says banks haven't given investors enough time. Could this wound up in margin calls globally? Treasury Secretary Yellen, who recently said she wasn't afraid, now says she has cited concerns about the potential for a breakdown in trading of U.S. securities. U.S. first-time jobless claims rise to highest level in 7 weeks. And finally, NATO's Stoltenberg says there will be severe consequences if Russia uses nuclear weapons in Ukraine. We will not go into how exactly we will respond. With all of that being said, the market got a random rally after a flash crash to the downside. I could be wrong, but I personally don't think this is a bottom, especially if the Fed is going to do another 0.75 or a 100 basis point rate hike, which I think is very likely, because it shows that their slowing down of the economy isn't working to the degree that I think they want it to work to. So ultimately, this is something I expect from the S&P 500, watching that $324 $1 level on the SPY, and I'm waiting for that flash crash to the downside, waiting for margin calls, etc, etc. Hopefully you guys enjoyed the video. Consider hitting that like, hit that subscribe button, get your 10 free stocks link down below. Also, just share the video to someone and drop a comment what number like you are. I love you all. Lottery Stocks out.